Wall Street is increasingly interested in bringing private assets to everyday investors. Financial services firm Empower, which oversees $1.8 trillion in 401k accounts for 19 million people, recently announced that it will offer private credit, equity, and real estate into some of its accounts later on this year. But there are certain issues tied to private assets and mainstream use. According to our very own Bob Powell, private assets can be complex and illiquid, meaning they aren't easily bought or sold. These assets tend to have higher fees, and there's less transparency because private companies aren't subject to the same disclosure rules as public companies. Our next guest says that there's plumbing that will have to be modified to allow these assets into 401ks. Here with more, we've got Jeremy Held, who is the managing director of Evergreen Strategies at Bow River Capital. Great to have you here with us. Bow River, we know, is a Denver-based alternative asset manager specializing in private credit, equity, and real estate, among other assets. So what kind of changes do need to be made to that plumbing in order for this to be reality and accessible to more people saving for retirement?
Yeah, look, I think the 401k market is a huge opportunity for investors to access the same types of private investments that institutional investors have had for years. The problem is, and the challenge is, and these are challenges that can be overcome, is that the plumbing, the operations, the mechanics of investing in 401ks is really made for mutual funds with daily accessibility. And I do think that the benefits do outweigh some of those challenges in terms of accessing just a much broader set of investments. So I do think that the 401k industry, the private equity industry, the operations firms that access this space will definitely make changes, because I think it's in the best interest of investors to have access to private companies in addition to public companies.
And so we had talked about the illiquid nature of some of these investments if they were packaged up and put into a broader investment vehicle for retirement. Should people who are saving for retirement still be concerned about the illiquid nature, or what should be the thought process? What are the conversations you're having?
Yeah, it's a great question. I think, what investors should be asking themselves at all times, whether they're retirement investors, taxable investors, is, do I need to have 100% of my assets 100% liquid 100% of the time? And if the answer to that is no, even if it's 85 or 90 or 95% of their assets are liquid, if they open up a small percentage to being illiquid, you can really open up the opportunity set for investors and invest in a much broader array of companies.
And so with that in mind, what is kind of the time horizon that you see more often among the clients that you're working with?
Yeah, typically we're working with long-term oriented clients. They're building a financial plan for 5 years, 10 years, 20 years and beyond. You think about it, 401k accounts are really ideally suited for a long investment horizon. You have people that are contributing to their 401k accounts in their 20s and 30s. They have a long-term time horizon, and I think private assets are really ideally suited for that time horizon.
For some of those private assets, I wonder what happens and how do you approach it when a private company makes their foray into becoming a publicly traded company, because obviously the liquidity profile then changes significantly.
It does, and I think what's happened a lot over the past really 2 or 3 decades, there's half as many public companies today as there were in the 90s. Companies are staying private a lot longer. A lot of public companies are being taken private. And so there is that opportunity for a private company to go public, but there's also the opportunity for public companies to go private. And I think investors want to have access to that broader universe.
What are the other assets outside of companies as we talk about and think about real estate and the credit side of this too?
Yeah, I think when people think about accessing markets today, they're not just thinking about public or private. They're saying, I want an allocation to real estate, and I'm going to own some public real estate and some private real estate. I want an allocation to credit. I'll own some public credit and some private credit. And the same thing, of course, in equity. I'm going to own public equities and private equity. And they think about, how do I build the most diversified portfolio possible? And that includes both public and private assets.
What's the entry point for a retirement vehicle like this?
Yeah, I think evergreen funds, which are a new type of vehicle that are really transforming the way people access private investments, is really the best entry point. These are vehicles that are immediately invested, they're highly diversified, minimums as low as $50,000, and that's really a much more efficient way for a broader universe like 401k investors to access the private markets.
Do you see those minimums going lower in the future as more people try to gain exposure?
I do. I do think there's going to be some changes from a regulatory perspective. Historically, alternative investments have been limited to qualified purchasers, accredited investors. those eliminations, those restrictions are going away. And I do think you'll see minimums go from what used to be 5 million, now it went to 1 million, 50,000, and ultimately those will go even below there.
Great to have you here with us, Jeremy. In town from Denver, Colorado. Appreciate the time.
Yep, thanks, Brad.